Welcome to our channel. Many new traders are often confused about what they should learn to become profitable, where to start, and what they should focus on to stay consistently profitable in the market. So today we are going to tell you how to run up technical analysis step by step. Technical analysis, or price action, is divided into three main: 1. Basic price action, 2. Market psychology, 3. Smart money concepts. We will cover all of this in detail in our technical analysis video. So let's see what we are going to learn. Level 1, basic price action. In Level 1, we will learn about candlestick patterns. Chart patterns, important indicators, candlestick patterns. Candlesticks help us understand the psychology of buyers and sellers. By mastering candlestick patterns and using them correctly, we can improve our entry and exit points in any trade. In candlestick patterns, we will learn what is a candle, the psychology behind how candles are formed, different types of candles like doji and marubozu, bullish candlestick patterns such as bullish engulfing hammer, dragonfly, doji, morning star, inverted hammer, piercing line, tweezer, bottom 3 white soldiers, 3 inside up and 3 outside up. Candles. Bearish candlestick patterns include bearish engulfing hanging man, gravestone, doji, shooting star, evening star, tweezer, top 3 inside down and 3 outside down candle. Chart patterns. Market prices form certain patterns due to price movement. If we can identify these patterns, it becomes easier to find profitable trades. Some important chart patterns we will learn: double top, double bottom, head and shoulders, cup and handle, flag and pole, triangle, rectangle, support and resistance, supply and demand areas. Additionally, we will learn how to draw trend lines and identify trends like uptrend, downtrend, and sideways. Important indicators. Although many indicators are available, we will focus only on a few important ones, such as moving averages, RSI, ADX, VWAP, relative strength, Bollinger Bands, supertrend volume profiles, price volume, trend pivot points, parabolic SAR, unbalanced volume, Williams alligator, and Williams cent. Level 2, market psychology. In Level 2, we will understand how emotions, biases, and mental states influence traders' decision-making. By understanding market psychology, we can improve our performance in the stock market. Topics we will cover include fear and greed, overconfidence and ego, grit and revenge, trading herd mentality, confirmation bias, loss aversion, risk management, position sizing, managing uncertainty, patience and impulsiveness, and developing a trading routine. Level 3, smart money concepts. Have you ever felt that big players like banks, hedge funds, and institutional investors control the market? This is what we call the smart money concept. In this, we will learn how the flow of smart money can help retail traders make informed decisions. We will cover topics: market cycles, market structure shifts, trend following, liquidity concepts, stop-loss hunting, institutional order blocks, fair value gaps, accumulation and distribution phases, fake breakouts, manipulated market moves, risk mitigation, stop-loss placement, and market manipulation during news event. So friends, this was an introduction to the basic to advanced levels of technical analysis or price action. In our upcoming videos, we will cover all these topics in depth. If you like this video, please give it a like and subscribe to the channel.